Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is January 27, 2026, and we're diving into Texas Instruments' latest earnings report for Q4 2025. Joining us is John, a senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Texas Instruments, a leader in the semiconductor industry, has just released their Q4 2025 financial results, and there's a lot to unpack.
Revenue and profitability overview. Let's start with the top line. Texas Instruments reported a revenue of $4.42 billion for Q4 2025, which is a 10% increase from the same quarter last year. John, can you elaborate on this performance?
Absolutely. The revenue growth is quite impressive, especially considering the 7% sequential decrease. This year-over-year increase highlights the strong demand for their analog and embedded processing products, which are crucial in industrial and automotive markets.
And what about profitability?
Texas Instruments reported a net income of $1.16 billion with an earnings per share of 127 cents. Although this is slightly below the 130 EPS from last year, it reflects the company's robust operational efficiency and cost management strategies.
Cash flow and shareholder returns. Moving on to cash flow and shareholder returns, Texas Instruments has shown strong cash generation. Can you tell us more about this, John?
Sure. The company generated $7.2 billion in cash flow from operations over the past 12 months, underscoring the strength of their business model. Their free cash flow was $2.9 billion, and they returned $6.5 billion to shareholders through dividends and stock repurchases, which is a testament to their commitment to shareholder value.
And I see there's been a dividend increase?
Yes, dividends paid increased by 4% over the past year, reflecting Texas Instruments' confidence in their ongoing cash flow generation and financial health.
EPS forecast and analyst expectations. Let's discuss the earnings per share. Analysts had forecasted an EPS of $1.30, but the actual EPS came in at $1.27. What are your thoughts on this, John?
The slight miss on EPS, which included a 6-cent reduction not in the original guidance, might raise some concerns. However, it's important to note that the overall financial health and strategic investments of the company remain strong, which should reassure investors.
Operational efficiencies and future outlook. John, how is Texas Instruments positioning itself for the future?
Texas Instruments is heavily investing in R&D and SG&A, with $3.9 billion spent over the past year and $4.6 billion in capital expenditures. This indicates a strong focus on innovation and capacity expansion. Looking ahead, their Q1 2026 revenue is projected to be between $4.32 billion and $4.68 billion, with EPS expected to range from 122 to 148.
That sounds promising. How do you see these investments impacting their future performance?
These investments are crucial for maintaining their competitive edge and supporting long-term growth, especially in the rapidly evolving semiconductor industry. They are well-positioned to capitalize on future opportunities.